What's up, everyone? Welcome back to another portfolio update video. It is officially 2025, and I hope everybody out there enjoyed their holidays. I definitely did. I went skiing and took a little bit of time off of making videos, but I'm back and ready to start making content again. And in this one, I want to talk about what my strategy is going into the new year and a couple of my top stocks for 2025. If you're new here, my name is Sheldon, and I've been investing and managing my own portfolio for a little over 5 years now, and I like to make completely transparent videos talking about how I invest in the stock market. So if you're somebody that's interested in investing and you want to learn how to build and grow your own portfolio, then subscribe to the channel and let's go on this crazy journey of investing together. With all that being said, let's dive right into the accounts, and currently I'm sitting at $81,751 in the accounts. It's been a little bit of a chunky month. We went all the way up to almost 83,000. We're currently sitting at a total rate of return of 65%, a little bit over $30,000. And since the last update video, I did end up adding a small position of AMD. I bought 18 shares and got in at, I believe, the average price of $127. So I'm down slightly since I bought, but I literally just started this position, and I do plan on making a full video going in depth on kind of what my bullish thesis is on AMD. So we're not going to really touch that much on this position in today's video. But that's the biggest new move in the account. And basically not much else has changed. Palantir has been floating around $80. So that's been, Palantir is Palantir at this point, and we just kind of let that thing fly. That's what we do with Palantir. We did take a small chunk of that position out and cycle that into AMD. So I started my AMD position with the amount of money that I sold out of Palantir with. So VOO, one thing that I want to do this year is definitely continue to dollar cost average into VOO and just continue to build up my ETF position in my portfolio. A lot of the stocks that I owned last year did go up a lot, so, the allocation in the account kind of got a little bit more skewed into stocks than I was hoping for, at least. So, and that's not a bad problem to have, if you have to rebalance your portfolio because your stocks go up, champagne problems there. But Palantir is definitely the biggest position in an individual stock that I have going into the new year. Meta, Google, Apple, don't see myself doing anything different with all of those. JP Morgan actually had a really good year for a bank, and I hold that one pretty much because it's a stability play. I like to have a little bit of exposure into different industries, and financials being one of them. And JP Morgan's just a really solid bank that's, I don't mind holding in my portfolio. But the stock that I want to talk about, well, there's two stocks that I want to talk about in today's video. The first one is Nike. Nike. Okay, so we're currently sitting down about 20% on the position, right? And I got into the stock at $90. I have 36 shares, so we're down around $633. And if we look at the Nike chart, unfortunately, this is a 1 year, I believe. So unfortunately, I started to get into Nike right before it had this really big drop right here. I remember I was I was buying it, and I got in. I don't think I bought all my shares at once. I kind of averaged into it, and all of a sudden it went down from like 90 to like low 70s where it's at now. And I was like, damn, should have waited to buy a little bit. But hindsight is always 20/20 in the market. And I'm still bullish on Nike for the long term, but we're going to talk about kind of where this stock is sitting and dive into the financials a little bit, and because they released earnings on December 19th. And I'll be honest, the earnings, they were not good. They kind of sucked. They sucked a whole lot of ass. I'm not going to lie. Nike in their last quarter. And to just outline that a little bit, if we scroll down here, I believe, so this shows, that's not the one I want. I want this one. So total Nike brand, they had a decline in footwear. They had a decline in apparel. They had a decline, or no, they didn't. They actually went up on equipment, even though equipment is their smallest segment. But all pretty much their biggest key segments of Nike all had declines. And it's mainly due to, or a big problem that Nike has had is because they tried to do this weird thing where they pulled out of retail and really tried to push their direct-to-consumer channel, I guess you could call it. And I believe it states in this article, when you pull back from that channel and withhold some of your best and newest products, someone else comes in and fills those shelves. So in a lot of retailers like Foot Locker, Nike wasn't shipping all of their products out to those in-store sellers of their products. And they were trying to but they were trying to push a lot of their audience and a lot of their sales through their direct-to-consumer branch, and that ended up being a really big mistake. As you can see, they had a decline in every segment, even in geography, I believe, if that is right here as well. So North America, footwear, 14% decrease. Apparel, wow, in North America, they actually had a 1% increase in apparel. Okay, that's one good thing that I've seen from this earnings report. In Europe, Middle East, Africa, down 9% footwear, down 5% in apparel. Greater China, they went down 12% in footwear, 1% in apparel for the upside, but it's not good, right? And they did just get a new CEO, and this is one thing that he said at the top here, but after an energizing 60 days of being back with my Nike teammates. So at the time of the earnings, Elliott Hill, who is their new CEO, was back with the company for around 60 days. Our clear priority is to return sports to the center of everything we do. We're taking immediate action to reposition our business so we can get back to driving long-term shareholder value. Our team is ready to go, and I'm confident you will see more moments of Nike being Nike again. So, he's pretty new to the CEO position, at least, but he's definitely not new to Nike, and we're going to dive into his experience here. But you got to give this time. I think is one thing that I believe is you got to give this time. He's only been in there for not even a full quarter yet. And I believe you got to give him at least a year to really try and turn things around. I think they got to get back into retailers. They got to really push that. Not to say that they need to stop pushing their direct-to-consumer sales. I don't think they need to stop that at all. But they got to have both of those channels because clearly when they focused on direct-to-consumer, they didn't really see the results that they wanted from that. And there's also been an increase in competition, On shoes, Puma, even Adidas and Reebok. I guess Reebok Reebok is a competitor, but all of their competitors have continued to grow their business and try to take market share from Nike, especially as they pulled out of those retailers, and it definitely got reflected in this earnings report. So that being said, why am I still bullish on this stock? And I still like the long-term vision of Nike. Nike is such a global brand. They still have a big amount of market share. Not gonna lie, I use their products. I love their products. I've ran in a lot of shoes, and the Vaporflies are the best shoes. Literally the best shoes that I've ever run in. They're kind of like cheat code shoes. And they pay a decent dividend, 2.18%. That's not bad. And so if Elliott Hill gets in there, right, and let's look at his experience here. This dude literally started from the bottom up in Nike as an intern, just as a sales representative, right? So he was just in store, and this dude literally climbed the ranks all the way to the top of this company. He went from intern, sales representative, to more sales, team sales, sales management, director, vice president, and general manager, vice president of USA Commerce, vice president of global retail, vice president and general manager of North America. So this guy knows the business, okay? And I believe if we give him time to get in there and shake things up and drive that old Nike vision back, get back into stores, and really just talk about that Nike voice and get back to old Nike, basically, like what he said in that shareholder letter, right? And he just, it's impressive that he climbed the ranks like this, right? Like he went in and did it. And then eventually he went all the way up to chief executive officer in October. So I'm still a fan of Nike for the long term. Obviously, in the short term, it's going to be pretty rocky. And on a 5-year chart, they topped out at around 175, and it's been a pretty steady decline since then. Like look at that 5-year chart. That's not good if you bought over here or if you bought at the top. But I think given another 3 to 5 years, this is not a play for me where I'm like expecting to make even a good amount in the next year. Do I think they're going to finish or start 2026 with a higher share price than they have now? I do think they're going to have a green year. Because given a couple quarters, I think Elliott Hill's going to get in there, shake things up. We're going to get some actual revenue increases potentially. Because if we look at a quarterly basis, I believe, they've had 1, 2, 3 quarters of pretty solid decline in revenue, like 10%, 7%. Those aren't small numbers of revenue decline, especially when you look at, the increases that they had in the quarters before that. Like it was like, I guess they had 13, 17%. But 4, 2, 0.5, 0.3% revenue growth. Like if we get back to just some green revenue growth, some positive revenue growth this year, not even really asking for crazy numbers, because I definitely don't think any crazy numbers above 5% revenue growth is going to happen. But I think between 1 and 3, maybe 4% revenue growth is definitely possible. And if we can get back to those numbers, then I also think that's going to get reflected positively in the stock price. So, it'll be interesting to see. I'm not sure when their next earnings date is. I guess it's not for basically the next quarter. Currently it's January 5th. So they got a full quarter to, see how all of this plays out. And it'll definitely be interesting to see where Elliott Hill takes Nike. And just to show one thing here, guys, look at how nice this shoe is, okay? Like, I hope that's going to focus. I think if I get my face out of it, maybe that focused, maybe not. But Nike, they just have the most quality products that, as an athlete and as somebody that likes to train a lot and likes to run, I am basically Nike's target customer. So I can understand from that customer perspective that they have really quality products, good products. And I'm not only a Nike, I don't only like their products because I'm also a shareholder. Like if I wasn't a shareholder, I would still like all of their products. Yes, they are a little bit expensive. So maybe one thing that they have to do is bring prices down, but I mean, let me know what you guys think about Nike, because I know there's lots of bears out there on the stock right now, and maybe this is a little bit of a hot take position to have, but I'm a believer in the brand. I'm a believer in their products and just everything that they've done in terms of the sports world and the athletes that they sponsor. So yeah, it'll be interesting to see how all that plays out. So the next stock that I want to talk about here is one that I started buying in the summer of last year, and that is Caterpillar. Currently up around 8% on the stock, so I haven't even held this one for a full year yet, and I'm already up over 8%, so personally, you cannot complain about that return. I only have 7 shares, and I got in at $335. It's currently sitting at $363. So let's pull up their chart here. Let's just look. They have pulled back a little bit since their highs. They hit around 416 November 6th. They hit 418 as a high in the 52-week range. And then I believe all of industrials kind of pulled back recently. If we look at VIS, which is Vanguard's industrials ETF, even though the whole broader market has also pulled back, I believe industrials started taking a bit of a pullback before the general market. And it was kind of near, if we go like 1 month here, yeah, that's December 4th. So, I mean, let's just go a year. But they have pulled back, just like the broader industry in general. So when the industrials industry pulls back, Caterpillar's going to pull back. Um, you know, I'm kind of waiting for their next earnings in February 3rd again to really do anything with it. This Caterpillar's definitely a hold for me. Let me get that out of the way. It seems to be a little bit of a controversial stock. Like, some people have very strong opinions on either not wanting to own it or definitely wanting to own it. I guess I'm just a hold right now. Like, obviously it's in my portfolio, and I'd like it for the reason that it is, and probably it's my favorite industrial stock. I like to have that diversification. And, since I have a lot of tech in my portfolio, right? Like, if we look at my portfolio, Palantir, Meta, Google, Apple, and then a lot of my smaller positions are my diversification plays, which that wasn't intended, but tech stocks just have seemed to perform better for me in my history of investing. That's just how it is. They're higher margin businesses. They make more money. But I also like the diversification. Same with Nike. It's another reason that I own Nike. And Caterpillar, it's my favorite industrial stock. They have been, had a little bit of a rocky quarter. I think last time I did a video on Caterpillar, they were really struggling with inventory. There hasn't been much news come out with Caterpillar recently, other than it's pretty far down off its highs. So, if you're looking to get in, it doesn't look like a terrible time to get into the stock, considering, like, even if we look at SPY and then go 1 month, like, even the S&P 500 is taking a little bit of a breather here. That's what I think. We ended the year with such a crazy rally. Like, the last 2 quarters of 2024 were like crazy rally. Like, we went up a lot in those 6 months of the stock market, right? So at the beginning of 2025, I can understand how the market is taking a bit of a breather, is going down a little bit. It's nothing to freak out over. There's been no crazy news that has come out. The Fed came out and said that they weren't going to reduce interest rates by as much as some people thought they were going to. So that's one thing. But they're still going to reduce rates. So it's like, I'm comfortable letting that play out and see how that goes. But, in terms of Caterpillar, it's really just a hold. Like, I have a lot of conviction on Caterpillar just because I love the diversification that it gives. And if tech does go down, like if we see maybe a bit more than a pullback, I don't think there's going to be a crash, but if we see a lot of tech stocks start to go down, a lot of these big players and a lot of these big funds, they tend to cycle money into industrials, into banking, financials, retailers. So I like to be covered. I got my ass covered if we see sector cycling of money here in the first half of the year, which I do think is possible. And because tech stocks have just been so hot, and I think they could pull back, and that's Nike. And so I think holding Nike, holding Caterpillar, holding other stocks like that, it's just a good safety play for the diversification. And I wouldn't be surprised if by the end of the year we see Caterpillar back up into that 400 range, maybe even further than 400, into that 420, 430 range if they have a really good couple earnings reports come out. But yeah, for Nike, Caterpillar, they're both holds for me right now. If you've watched the channel before, you might know that I'm in school right now, and I graduate the first quarter basically of this year, and then I'll be able to get back to working and get back to making money and contributing money into the account. So for the first 4 months of the year, I'm not even really going to be able to average into a lot of these stocks. I'm positioned how I want to be, but my strategy going into the year for the first couple months is basically hold my portfolio exactly how it is. I like how I'm positioned. I'm pretty well diversified. I have a good amount of money in the S&P 500, a good amount of money in tech stocks, and a good amount of money in just other industries and other sectors in individual stocks as well. So I like how I'm positioned. That's my strategy going into the year. If you got any value out of the video, please consider dropping a like and subscribing to the channel if you want to join the community. Like I said, let's all build and learn about the market together. It's more fun when we all do it together. You know, I'm not claiming to be an expert, and I'm just somebody who likes to share my experience along the way. And I'm learning just as much as you guys are. So let's all do it together. I think we all have a better chance of building our portfolios and building that long-term wealth when we all join the conversation and do it together. Maybe I'll make a Discord community this year. That's one thing that I've been thinking about. So let me know if that's something that you'd be interested in the comments below. As always, I wish you the best of luck on your investment journey. Peace out.